Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Monday the 17th of November. I'm Caroline Hepker in London.
And I'm Stephen Carroll in Brussels. Coming up today, Bitcoin erases almost all of this year's gains as it slides close to a key pain point.
US President Donald Trump flips his stance to support a vote releasing the Epstein files.
Plus, astronomics. Why meteorite hunters are scouring the Sahara desert for riches from outer space.
Let's start with a roundup of our top stories.
Bitcoin has erased almost all of its gains so far this year and briefly slipped into the red for 2025 before stabilising this morning in Asia. The cryptocurrency has fallen from a peak of around $126,000 in October to around $95,000 today. With more, here's Bloomberg's Chris Pitt.
From exchange-traded fund allocators to corporate treasuries, many of the biggest buyers of Bitcoin have quietly stepped back from the digital asset over the past month. At the same time, the recent cooling of high-flying technology stocks has led to a drop in overall risk appetite, depriving the market of the support that had helped to propel the token to record highs earlier this year. As Mike McGlone, senior commodity strategist at Bloomberg Intelligence, puts it, with gold and stocks near all-time highs, Bitcoin is now the tip of the risk assets iceberg. And melting. In London, Chris Pitt, Bloomberg Radio.
The British government plans to make it easier to remove migrants with no rights to stay in the UK. That's after 40,000 people made the journey across the English Channel in small boats this year. The Home Secretary will set out her plans to cut illegal migration in Parliament later today. Shabana Mahmood says that she sees it as her moral mission to restore control to what she calls the broken asylum system.
At the moment, our system is particularly generous compared to other countries in Europe, where after 5 years, you're effectively automatically settled in this country. We will change that so that the status you get when your claim is granted is for 2.5 years and which is renewable every 2.5 years.
UK Home Secretary Shabana Mahmood speaking there as Prime Minister Keir Starmer looks to regain the narrative after a bruising week for the ruling Labour Party.
US President Donald Trump has called on Republicans in the House of Representatives to vote for the Justice Department to release its files on Jeffrey Epstein in a reversal of his months-long opposition to the move. In a social media post, he said lawmakers should vote to disclose the documents, quote, because we have nothing to hide and it's time to move on. Speaking to Fox News over the weekend, House Speaker Mike Johnson said the president is not concerned by the Epstein scrutiny.
He's not worried about it. I talk to him all the time. He has nothing to do with this. He's frustrated that they're turning it into a political issue, and it's not surprising because the Democrats have nothing else to talk about. What have they accomplished in 10 months? Epstein is their entire game plan.
House Speaker Mike Johnson there as Trump has come under increasing pressure to release materials related to the late convicted paedophile, with the House scheduled to vote on the matter on Thursday. Trump has repeatedly said he cut ties with Epstein nearly 2 decades ago and was not aware of the disgraced financier's activities.
A bill to sanction countries doing business with Russia appears to have the president's support. Over the weekend, Trump gave his strongest indication yet that he would back Senate legislation to target major consumers of Russian energy that are not actively supporting Ukraine. If passed, it would allow the US to impose import tariffs of up to 500% on countries including India and China. Speaking to reporters as he left Florida on Sunday, President Trump said that he was fine for Congress to move forwards with the bill.
Any country that does business with Russia will be very severely sanctioned. We may add Iran to the formula, yeah.
President Trump there as Ukraine intensifies strikes on Russian energy infrastructure, claiming it hit a Rosneft refinery in Russia's Samara region.
Oil traders are not expecting OPEC Plus to cut production next year, despite forecasts of a global surplus. That's according to almost 2/3 of brokers and analysts surveyed by Bloomberg. While many anticipate an oversupply next year, they say it won't necessarily be large enough to sink crude prices and provoke OPEC Plus to reverse this year's production hike. Brent oil futures are down by over 10% this year to near $64 a barrel for Brent crude, and some Wall Street forecasters anticipate further price declines.
Germany's finance minister will push for fewer Chinese trade barriers on a visit to Asia. His trip comes as tension between the US, China and Europe ramp up. Bloomberg's Tiwa Adebayo has that story.
Departing for a high-stakes mission in Asia, Germany's Lars Klingbeil called for open and rules-based global trade. The country's finance minister is set to make stops in Beijing, Shanghai and Singapore to discuss topics including access to raw materials and Chinese overcapacity. He'll be accompanied by representatives from the German central bank and officials from private sector firms like Deutsche Bank and Allianz. The high-level financial dialogue is also expected to include discussion with Chinese regulatory authorities and financial companies. It comes amidst strained relations between China and Europe after Beijing tightened export controls and Germany's foreign minister postponed a planned visit to China. Meanwhile, German business leaders poured 1.3 billion euros into China between 2023 and 2024, despite government warnings. In London, Tiwa Adebayo, Bloomberg Radio.
And those are your top stories on the markets this morning. The MSCI Asia Pacific Index is down 0.3%. The Hang Seng 1.1% lower. Oil prices 0.9 lower today for Brent crude to $63.84 a barrel. Bitcoin's up 1.5% on the day now, but hovering around that $95,000 mark. European stock futures 0.1% lower for Euro Stoxx 50 futures.
Well, in a moment, we're going to bring you more on the sell-off in Bitcoin. There doesn't seem to have been a particular trigger for it, so we'll get into that story. And also why meteor hunters are being drawn to the Sahara Desert. But before that, another story has caught our eye today.
I mean, if like me, you've woken up this morning and realised that it's just over a month to Christmas and you've done nothing about it, this is, which I know would never happen to you, Caroline, but there's a great list been put together by our colleagues from Bloomberg Pursuits, which might give you some ideas. Now, it's very much the high-low of Christmas present buying. So sure, right. If you've got $82,000 to spend, you know, there's a David Webb cubist ring, for example, very shiny, something perhaps very interesting as well. The general theme, though, the team has identified is to lean into creature comforts and nostalgic items that evoke warm memories and invite storytelling. I don't know how Tory birch candlesticks shaped like lettuces quite fit into that theme, but sure, why not? One thing I genuinely was quite pleased to see is there's a Discman in there, or the modern version of a Discman in there too, and a tin can phone, which is essentially what looks like a landline to you and me, but you plug it into an internet router, it can phone other phones of the same kind. And it's, you know, a screen-free way of letting your teenagers communicate. I
absolutely love that. That one obviously appealed to me. Do you remember? I actually had a hamburger phone years back. So I love the phone. Yeah. Do you remember those? The flip phones? Vintage flip phones apparently are back. So perhaps this is more, in my realm of Christmas present gifting. But there's also food in there that I thought was really nice. A Sachertorte from Vienna, you know, the chocolate cake. And apparently they do an annual collaboration with an artist. And this year it's the American painter Catherine Bernhardt. But I wonder also whether that might be borrowed, because Dolce & Gabbana, for example, do every year an Italian panettone cake in a beautiful tin.
Okay, well, now I know what to get you for Christmas. Fair enough. You can find the full list at Bloomberg.com. We put a link to it in our podcast show notes as well. Let's bring you back, though, to some of those key market stories we're watching this morning. And this milestone for Bitcoin, the token erasing all of the gains that it made so far this year, just lifted slightly off that level this morning now. Our markets reporter Valerie Teitel is with us for more. Valerie, what's driving this sell-off broadly in Bitcoin?
Well, look, that's a great question. I hope I can try to answer that. But Bitcoin's reversal from all-time highs on October 6th is really following the broader weakness in tech stocks in the equity market. We know the equity market has not had a good November. Frankly, it's down some 5% from all-time highs. At least the Nasdaq is from late October. But when it comes to Bitcoin, you know, obviously the move has been a lot more pronounced. Not only has it wiped out year-to-date gains, it's also down 25% highest since its October 6th peak. So in just a month and a half, it's gone from 125,000 to now trading around the 95,000 level. It's wiped out 600 billion in market cap in that time. Now, you know me, Stephen, I always want to tie this to the macro, and that does involve the Fed. We've had a hawkish Fed decision. Not only that, we've had, it seems like, a rebellion of some more hawkish FOMC members really trying to put this December cut in doubt. That kind of move does dent speculative assets. And then on the back of that, you've also had the Fed being quiet when it comes to rises in short-term funding rates and the $12 trillion repo market. So again, these hawkish signals from the U.S. Central Bank is not allowing speculative assets to rally. If anything, it's causing them some pain. And we've seen that over the weekend when it comes to crypto as well.
Yeah, gosh, that's a lot of thinking to get to that answer, isn't it? Look, our colleague Garfield Reynolds on the Markets Live team has also pointed out that Bitcoin is getting closer to another pain point.
Yeah, this is really interesting. So this is according to research from K33. It wants to point out where essentially the average entry point for a Bitcoin ETF holder is. And in their research, it's around 90,000. And why that's important is because we're essentially nearing that level. And for a retail investor, that might be the point at which they want to get out of their asset once they get back to breaking even when it comes to a retail investor holding an ETF-linked Bitcoin. So watch out for that. Garfield Reynolds on the MLive blog mentioning how that can be a further pain point. And that does tie in to the fact that these Bitcoin ETFs have been very popular of late, and a lot of people piled in there around that $90,000 level.
All of this happening at a time, of course, Valerie, where we're thinking about strains in the market. We had the equity sell-off last week. You know, we've got Nvidia's earnings coming up this week. That could be another catalyst as well. And we've also had this interesting, remark from the Fed as well about the uptick in usage of its short-term lending facility. What does that tell us about the state of the market?
Well, look, I think what it tells us is that perhaps for the equity market and for the more debt-fueled AI ambitions to really be unleashed. And you can tie that to crypto. Crypto really is tied in to how this AI trade does. You need a dovish central bank. And frankly, in the last 2 weeks, we haven't had that. We did have some news broken by the FT on Friday that the New York Fed had convened with Wall Street over these strains of liquidity of short-term funding rates that have to do with repo levels, which is essentially where you can borrow overnight cash on the back of a treasury bond. So in some way, perhaps the Fed is now being more noticed, is noticing more these funding strains in the front end, but they have really not acted aggressively. And that is a big departure from the Fed that we've seen post the 2018-2019 repo blowout. If you guys remember that, there was a huge blow up in repo rates over year end in 2018. Since then, the Fed has always acted aggressively whenever these repo rates have ticked higher above the Fed's upper bound. But frankly, in the last few weeks, they've not done that. And the market is trying to piece together whether this is a new Fed, if this is a departure from that norm that they set back in 2019, or perhaps there is something in the Fed's mind that they do want to act. Maybe they're just waiting to gather more data before they do.
Okay, Valerie, thank you so much for being with us. Our markets reporter, Valerie Teitel. Stay with us. More from Bloomberg Daybreak Europe coming up after this.
Now, meteorite hunters are scouring the Sahara for fragments from outer space. Morocco is at the centre of this growing trade. Joining us now to discuss Bloomberg's Middle East and North Africa managing editor, Honor Ant. Honor, good to have you with us. So who's buying meteorites and how much are they worth?
As far as we can tell, currently the potential buyers range from philanthropies to people, just curious individuals who want to collect meteorites from around the world. And Morocco is definitely a favorite spot for most of them because of its ability, for lack of a better word, to generate meteorites on basically websites that are known where these fragments are sold on a daily basis.
Yeah, absolutely. So they might come from asteroids, they might come from the moon. And as you say, Morocco is at the centre of this trade. How important is it to the local economy?
Obviously, there are a lot of areas in the world where you can find meteorites, but because of Morocco's desert climate, the weather there basically protects fragments, and the landscape, the deserts, make them fairly easy to spot for meteorite hunters. And for Morocco's own local economy, it is actually somewhat significant. The southeast of the country, where most of these fragments are found, it's generally very poor. So a lot of people are economically driven to search for fragments and basically provide a steady supply of income for their family. So it is fairly common for people in southeast Morocco, as well as people from elsewhere in the country, to travel to this region and to be in constant lookout for meteorites and basically sell them on the second-hand market.
What sort of tracking or rules are there around this sort of activity?
There are some rules, especially in Morocco. For instance, people or hunters need to register with a specific government agency. They're only allowed to sell a certain percentage, about 90% of what they found, after registering their finds. But even despite this government-backed scheme to keep track of meteorites and the hunters and how much gets found and sold, it's a fairly free environment. I mean, it's one of the least restrictive environments where you find governments trying to keep track of, these fragments, who looks for them and who sells them. And yeah, needless to say, obviously the actual hunters need to be residents of the country. So they're not, at least officially, foreigners are not allowed to sort of parachute in to look for fragments in the desert.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.